Hello folks, this is Sunday evening here in the UK. It's just coming up to 8:45 in the evening, 17th of May. Let's just have a look at some equity markets and see what we think might unfold for next week. If you recall from last week's video, and I must apologise for not posting any updates, my video software threw a wobbler and decided to stop working, so I've had to, but anyway, hopefully we're back up and running again now, so here we go. Right, you see this Gartley on the Dow Jones. This is Dow Jones. It worked absolutely spot on. If you recall from the previous blog post, I think I had a chart of it, and I put keep an eye on this. This is a post from last week. Notice the yellow rectangle on the chart of the Dow. This is where it closed last Friday, and it was just that the two ratios were coming together. Your 786 and your 1.618 coming together right there. If I actually draw the ratios in, you can see there's your 786 right on the money, and then your 1.618 expansion came in off the BC swing here, absolutely on the money as well, and that was the sort of zone you were looking for, and it hit that zone. The market opened on Sunday night, Monday morning, hit that zone absolutely spot on. Now somebody asked a question. He said, well, if you were going to trade this, where would you enter your trade? Well, if I were entering on the 4-hour chart, we've got a run of green candles here, so I would wait. I'd let the market take out the low of this candle. The low of that candle was 24,485, so I'd have a sell order in at 24,480, and have my stop above the high on that was 575, so I have my stop 5 above that, and that'd be 100 points risk. Folk, that's a small stop loss. You get a 100-point move on a 2-minute candle on the Dow where it's trading, so that was a pretty good 100 pips risk. He got in on the next candle, and after this 4-hour candle, which was, if you look at it, about 180 pips or so, low with 369, yeah, about 160 pips, sorry. You could have possibly got to break even after one candle, and then off she's gone. And then all in, there was 1,680 points in that trade from entry at 480. There was 1,600 points plus in that trade. Obviously, that's if you got the exact tick. You don't get the exact tick. But you use the patterns to guide you. So this is an A, B, C, D to the downside. You can see where that comes in, and you can see it actually went through that, but it extended to 1.128 of the CD leg, extended to 1.128 of the AB leg, just went a little bit lower, and then it rallied back like somebody on the end of a bungee wire, didn't it? Straight back up. So you could have had a profit. There's your 1.27, 1.27 off of that swing there. So you see, you could have sorry, 1.27 off of that, so that could have been a profit objective. So once it went lower, you could have had your stop, lowered your stop to that 1.27 level, which would have been 23,000. As soon as it went back above 23,000, you're out of the trade. That's just shy of 1,500 points profit, 15 to 1. If you risk 100 pips, that's a 15 to 1 trade. So, and you can see we bounced on Thursday, and then Friday sort of a bit of a sideways day, a bit of a doji candle on the daily. If you look at Friday, a bit of a doji bar there. So it's going to be interesting to see whether it can push higher. We did manage to close above point B. Your A, B, C, D, so that could be good from a bullish point of view. If you Gartley off this low here, we haven't made the 382 off the low down at the bottom there yet. So it's possible it could come down one more time, or it's also possible this high could be in, and we're going to see a much larger correction. So it's early days. That ABCD is complete. Not quite. There's your 618 and 780. It's possible it could push up one more time to get into that area. Possible. So we just have to wait and see. That's a bit of an indecisive day. We had a nice bounce. We didn't follow through on Friday. So I'd be concerned about that from a bullish perspective. So you need to keep an eye on this. There is a chance of an ABCD to the upside. And that would complete potentially a 135 pattern, wouldn't it? If you did get an ABCD, something like that, then you'd have 3 lower tops coming in. I'll just fade that back a little bit so we can take a look at it. There's a potential for a 1, 3, 5 lower tops pattern. If I can draw that in from your high to your low, 0.3, a 135 would come in something like that, around that area. Both at 786 with the looks of them. You see, so you'll be looking at something possibly on that nature. So that's worth keeping an eye on as well. You like to see some nice time symmetry with these sort of patterns. So that's coming in a little bit further along. But we'll have to wait and see. So be aware of a 135 lower tops pattern, and then we start another leg down. So yeah, keep an eye on your 24,300 level. That complete this ABCD. If in that fact we take this high out, see what you've got to be aware of is we are making a series of lower highs. You had the high, came down, the Gartley, it's lower high, lower highs, lower highs, and lower highs. There's 4 lower highs there. So it needs to start. If this is going to be bullish, it's got to start making some higher highs, hasn't it? So that's what we're seeing in the Dow. If I have a quick look now at the S&Ps, it's a similar picture on that, very similar. We had the Gartley. The Gartley on the S&P went a little bit higher. It went to 0.9, but it was a perfect ABCD, and then that started lower. And again, we're in a similar position. We had the bounce, come back down. So again, jury's out on that one. We could potentially, this low's key. It breached the low, but it's managed to hold it. So this low here, this 27.75, that's a key level, folks, to watch on the S&Ps. Okay, 27.75. It gets below that, that will be bearish in my eyes. Look at the German DAX. That closed quite strongly. If I look at the 4 hour again. Again, you see, we broke out, 3 drives to a top, came down. That was previous resistance, broke through it. Back above it, back below it. Now, this level here is key now, isn't it, on the DAX? Just extend that out a little bit so we can take a look at it. That is a key level of support now, isn't it? It was resistance, broke through it, support, come back down, supported on it again. Break below this, folks. That's bearish, but there is an ABCD structure there, so that has completed that ABCD right there, or it's not quite completed, it's near enough for trading purposes. So that could be all she does, and she starts higher, so you need to be aware of that. There's also another chance, a 135 pattern here on the DAX. If you only get so far up on Monday and then start lower, there's another 135, isn't there? The lower tops pattern. Be right there, somewhere in that area, you'd have a 135. So keep an eye on that one. So it'll be an interesting week this week. Probably a bit of a tug of war going on between the bulls and the bears. We'll have a quick look at the FTSE 100. Quick look at that one. That looks a lot weaker, doesn't it? Yeah, but we have got it didn't quite complete the ABCD, so it's gone a bit rangy, hasn't it? Completed the 3 drives to a top, nice ABCD there. I don't think we completed the ABCD to the upside. That'll be AB leg. No, we're way short of it, weren't we? Way short. So yeah, a nice bit of time symmetry between the 3 drives as well. They've come down, lower high. So again, keep an eye on these. Keep an eye on this point B low here. Breached it, we're above it, back below that, folks. That's bearish in my opinion. So yes, so that's what I'm seeing in the equity markets tonight. Let's just have a quick look at the Hang Seng. The reason I like this market is it could be a roadmap for the European and other markets going forwards. if we look at this chart of the Hang Seng, in fact take the weekly chart, might be a better one to look at, because if we look at this weekly chart of the Hang Seng, this high we made here was exactly a year ago. It was in April-May 2019, and then the market came down and completed this bigger A, B, C, D to the downside. Now if we look at that and compare it to the Dow and the S&P, the European markets, what the European markets have done and the US markets, they've just completed this big swing down, and now we've completed this potentially BC swing up. So the European and American markets could well be about to start this leg down what the Hang Seng did. So that could be like a roadmap going forward for the US and equity markets. If we just look at that, go back to the Dow and we'll see what I mean. You see, this is the Dow weekly chart. That's the leg down that we saw on the Hang Seng, yeah? But it happened now. The Hang Seng happened a year ago, yeah? So, and then we had the BC swing, and we could well be now starting the big ABCD to the downside. I don't know, it's all probabilities, folks, but it's just worth keeping an eye on. These are a slight head and shoulders there on the Dow on the weekly, but yes, I hope this helps, folks. This is just a quick look at the market. So it could be a bit mixed next week. We'll have to wait and see. But now I've got my video back working, I might be able to post a few more regular updates. So hopefully you've enjoyed your weekend. Trade safely, keep those stops tight, and speak to you again soon. Bye for now.